Welcome to the B.F. Anderson Technical Report for February the 17th. We're in the media, we're hearing all about Russia. We're also hearing a lot about interest rates and so forth. But I thought this was an interesting chart. They're saying that Russia could invade Ukraine at any time. So what we did is we got this chart here from LPL Research, which shows, different similar disasters or invasions or whatever, and what were the returns of the S&P shortly thereafter, basically. And the worst case scenario, the terrorist attacks, had about a 5% drop that day. North Korea invaded South Korea, 5.5%, that was 1950. So anyway, the average drawdown from these similar incidences was about 4.6%. So what I guess the point is that we can worry a whole lot about this kind of stuff, but it seems like the market does seem to take these things in stride. So let's look at the market right now. NASDAQ continuing to try to bottom. I really do feel like the market's trying to put a bottom in here. Of course, no guarantee on any of that, but it does look better. I mean, we came down on January 24th. We made a kind of a catastrophic low here, formed a little bit of a base, popped out of it. Now we're trying to form a second base. Would be very nice to get this back above the 200-day moving average. You can see here we're still below the 35-week moving average, which is not good, and the mid caps look pretty much the same way. We came down on the 24th, made a bottom, trying to rally here. Let's see if it can follow through. Now here's the New York Composite, same thing. Now the good news here is it's back above the 200-day and looking a little bit more constructive. Small caps continue to be kind of buried, came down hard, trying to rally, still not above that 200-day moving average. S&P 500 looking a little better, came down again, forming the same bottom. We're trying to rally back above that 200-day. We pulled back, kind of trying to hold it, so it kind of looks like the 200-day is somewhat acting like resistance. Still below the 35-week moving average, however, improving. Here we have the trend strength. Now, the trend strength, as you remember, this is a new indicator we've recently adopted, where we're taking 7 moving averages. Then we take a percentage of, if the index itself is above moving averages. And as you can see on the NASDAQ, we're below all of them. Therefore, trend strength is 0. Now here on the S&P 500, a little bit better. Trend strength is a reading of 29. So the way we look at it is readings below 50, we fall 50 to 25. We're looking at kind of a neutral stance on the market, basically moving sideways. Also really didn't like this double top here. Now on the sentiment indicators, you can see that there's been some put buying, has pushed us back above this level. We are seeing some good amount of fear. Now, if you can see here on the AAII bull-bear ratio, you can see that we really got down here in a very deep oversold fear area. However, on this particular evaluation of this particular survey, I went back and did this on a weekly basis, going all the way back to 1990. You can see it's very rare for us to get down into these fear levels. This is a big positive. This would be one of the reasons why I would think maybe the market is potentially trying to put a bottom in. Now we're seeing some improvement here on the percent of stocks on the NASDAQ above their 200-day moving average. Would really like to see that get back above 25, similar to this situation here. On the same calculation for the 200-day for the New York Stock Exchange, we're still below 50%. Would like to see that improve as well. Now, again, I have mentioned that I'm not an expert on yield curve. So the real question here is, which parameters do you use to determine the yield curve? This one is 5-year versus the 3-month Treasury. However, I've recently read that the way to look at the yield curve is the same way the Federal Reserve looks at the yield curve, which is the 10-year Treasury versus the 2-year Treasury note. And you can see that it's really starting to flatten out here. Why is this important? Well, mainly everyone and their brother out there is saying that the Fed's going to raise interest rates. However, with the yield curve starting to flatten like this, that may not necessarily be the case. I mean, if we get into an inverted yield curve, which means recession, the Fed is going to back off. but we'll see. That's no guarantee. Now on the aggression index, much improvement here. Looks like we may have made a bottom here, starting to zigzag our way up. You know, when the market makes a low or makes a bottom, it's a process. It's not a point in time. And what I mean by that is there's going to be a lot of zigs and zags. There's going to be a lot of volatility as it tries to form out that bottom. So the main thing is just to keep an eye on your stocks and make sure you're in the right areas. Now here are the three economic indicators. You can see here interest rates above 2% on the 10-year, which is a new high in a long while. Price of oil backing off a little bit, maybe due to the fact that the Russian thing is settling down a little bit. Financials, along with interest rates, somewhat pulling back, but continue to look constructive. Here we have new lows, too many new lows. This is the new lows on the New York Stock Exchange. As you can see, we don't want to see new lows over 40. And like just the other day, we got 181. We hit a high here back on the 24th of January, a big number. Continues. Now the volatility index, we are seeing a little bit of improvement there. However, it's starting to tick back up again. Really would like to see the volatility index or the VIX back below 20. Now here are the top five. Alcoa, new high. We're seeing things like these inflation-related companies, commodity companies. You got your breakout here, ascending flag formation. Alcoa looks good. Devon Energy, the energy stocks continue to look strong. A little bit of a pullback here, but breaking out again, hitting an all-time new high. Here is Halliburton, again, seeing strength there, breaking out. Here we have Intracellular Therapies, a stock we do own. Very strong uptrend. Supposedly they have a breakthrough in something called intracellular. And it has to do with neurological conditions where they're treating things like depression, schizophrenia, bipolar conditions. Anyway, stock is acting absolutely fantastic. Marathon Oil, again, we're seeing the continued strength in the oil stocks. So all in all, we're seeing the market try to form a bottom here. We continue to see strength in the oil area and the commodity areas. If you have any questions, please give me a call.